It's Friday. Happy Friday, everybody. I'm doing inspections at a house that we're helping to sell to one of our clients. And so location's a little bit different and a little bit difficult because we had some problems getting on Restream, but that's okay. Good afternoon, everyone. This is Roman Shersher, your number one online resource for buying property with your buy, invest, sell broker's formula for real estate success. Today is June 20th, 2025. Yesterday was Juneteenth. Please, guys, remember, if you like this video, I'd love for you to share it on social media. It helps so much to get the message across. Just tap the share button and share with your friends and family. All right. And also to anyone watching on Instagram and anyone actually in general, be sure to head over to Facebook or YouTube to check out the links and the slides and the content that I'm going to go over today. We're going to add it later, and so it'll definitely be on my YouTube, okay? Like I always say on all of these, I've bought and sold at this point hundreds of homes between Florida and California. I wrote a book packed with insider tips and tricks to save you $10,000 to $100,000 and to get your offer accepted, which is not always easy. This one, we were competing with multiple offers and we got the offer accepted because of the tips and tricks that I use to buy the hundreds of homes that I've bought throughout the course of my career. Demand is still high. There's a lot of listings coming to market, but demand is still high. But there are great opportunities right now, and I'll talk about that in just a moment. Great opportunities out there right now if you know how to buy right. So just DM me and I'll send you a free copy of the ebook, the book that I wrote. All right, current projects. We got this beautiful 5-bedroom home in Tarzana that we were able to just beat out the other offers. Yes, there are still multiple offers going in on homes. Even this home above list, we had to get it. Not with all homes out there, but the in-demand homes that are priced right. There's multiple offers coming in on these homes still. Just picked up a property. I just came back from Florida. That's why we did not have our weekly update last week. Just came back from Florida, picked up a new home in Jacksonville, Florida, put a new tenant in a new home in Jacksonville, Florida, and we're looking at more properties. If you're interested in investing in Jacksonville, Florida, hit me up. I work with a lot of people as partners, and we pick up and buy real estate portfolios out there, and we grow our wealth, our long-term real estate assets and wealth in that matter. Excuse me. All right, let's get to our content. All right, this week, the Fed met and decided to keep its interest rate unchanged at 4.25 to 4.5% this week. They're still citing persistent inflation, slowing economic growth. The real reason they're holding it is because they're trying to see and figure out what these tariffs are going to do. It's going to hit us with but probably just a one-time charge when these tariffs go into effect, and it's going to be months down the line after all of these companies get rid of all their inventories. And that's going to hit us with a quick inflation hit, and I think the Fed is waiting for that to happen. However, one of the Fed chairmen, Fed officials came out and said that we may see rate cuts as early as July, as early as next month. So we'll see. But opinions are divided, and uncertainty still remains high, which is why they didn't lower it. 7 out of the 19 members want no cuts this year, up from 4 in March. But we are seeing a very slow real estate market, and then that may shift their views on this. Their GDP growth is projected at just 1.4% for 2024, with inflation expected to reach about 3% for 2025. And so that's why they didn't cut. But I think the next Fed meeting in late July, from what I'm reading and what they're seeing in the economy, we may see a rate cut just next month. All right? Okay, next. Let's talk about California. So these rate cuts have really put a lot of people on pause and on hold. Home sales fell for the third straight month in May. They dropped 5.1% just from April, and April was an anemic sales month. We're down 4% just year over year in terms of sales, and last year's sales were very, very slow. It was the lowest. May sales pace was the lowest in 4 months. Year over year decline was the largest since December of 2023. So with this time, and we haven't seen price decreases, but in California as a whole, the median price dipped to 900,170 and is down 1.1% from April and 0.9% from May 2024. So we have this is California as a whole. We're not seeing those numbers in Southern California. I don't have those numbers with me today, but I'll try to have those next time. In California as a whole, we're down 0.9% from May 2024 to May 2025. Marking a rare annual price drop in the state. I've been telling you the prices have been going up despite the high interest levels, despite the increasing inventory levels. At this point, too many people are sitting on the sidelines and have pulled back and just are in a wait and see mode, and that's why we're seeing the small price decrease in California. Other states in the country, they're seeing bigger problems. California is still holding tight because we still have too many butts for the seats. We still have more housing units, more people that need to get family units that need to get into homes, that homes available. So even with the surge in actual listings, there's still low inventory for the amount of homes needed to house the people of California. Okay. And so let's speak about inventory. So inventory has gone up. California active listings hit a 67-month high, 5.5-year high, giving more buyers options and, of course, putting pressure on sellers that need to sell to price adjust. So right now, I'm going to tell you this, we have tremendous opportunity out there, okay? Certain homes that are priced low, like this one was, that are fully renovated, like this one is, those go, and we see multiple offers on those. But the ones that need a little bit of work, and I've been flipping homes for 18 years at this point. I know how to do those renovations. I have the teams to help with those renovations. We're seeing tremendous opportunities out there, and I'm looking to buy right now. Well, like Warren Buffett says, sell when everyone's buying, buy when everyone's selling. Inventory's up. Let's talk about mortgages. Mortgage demand drops even as the rates ease a little bit. Despite a slight drop in rates, and it's a slight drop, I'll tell you exactly what it is. The mortgage demand fell 5% last week and is down 4.5% year over year. Goes right in line with the slowdown in sales, right? Applications to purchase newly built homes fell to the slowest pace in 3 months. New home sales dropped 12.1% from April, as opposed to our normal home sales. Pending existing home sales dropped 5.1%, like I said. But new home sales dropped 12.1% from April to May. That's significant. Buyers are still wary. There's economic uncertainty out there. Tariffs, we don't know where they're going to end up. High prices are still a factor, and growing listings are keeping people on the sidelines. They're doing a wait and see type of tactic. I can understand, but at the same time, I think it's foolish. We ran numbers on this home here for our buyers. Even if prices even stall, okay, the property to get it later on is going to be harder once the mortgage rates drop, in which case, when you have multiple offers, they come up 10, 15, 50. A year ago, in April, it was $150,000 above list price. That's the type of offers we saw. So when you're competing you're going to pay significantly more for the property, as opposed to if you're dealing with the higher interest rates. It literally is about we calculated on this home with a 20% down payment. It was about $600 a month, and so $600 a month is $7,000, $7,200 to be precise, if you buy it now as opposed to waiting a year until the rates fall, whereas you're going to pay potentially $50,000 to $150,000 more next year. That's assuming that prices don't go up anywhere. And in the past couple of years, even with these high interest rates, they've been going up. So if the property goes up 5%, you're talking about just that alone on a $1.2 million house is $60,000. You're going to pay more for it, as opposed to dealing with the higher interest rate and paying an extra $7,000 for the year. More cost effective. And the amount of incentives, the amount of credits that I'm getting right now to a new level. These sellers do not want to fall out of escrow. So I'm telling you, right now is an amazing time to buy. Let's talk about mortgage rates. All right. Today, the 30-year fixed average is 6.87%. On May 30th, about 3 weeks ago when we did this last, it was at 6.97%. So it's dropped 10 basis points. The 15-year fixed dropped 10 basis points as well, from 6.23 to 6.13%. 30-year jumbo dropped 15 basis points from 7.1 to 6.95. 30-year FHA and VA dropped 6 basis points from 6.47 to 6.41 and 6.48 to 6.42 respectively. So rates have eased across most of the products. 30-year fixed now is at its lowest point since April, but it's still high and volatile, and people are waiting on the sidelines to see what happens. So what are the market implications? Number one, buyers have more choices. You have more choices if you're looking to buy right now, given the multi-year high in inventory. So it gives buyers leverage to negotiate, and it gives them more time to shop. Right now, the sellers are facing price pressure, so I'm getting better deals for my buyers. The deals are amazing. So I don't suggest you wait until rates drop. I don't feel that we're going to have a major price correction. It's just not in the cards. Every time we've had major price corrections, a major factor in that, major source of that price correction has been foreclosures. We have no foreclosures out there. It's like 2% of mortgages are delinquent, which is significantly lower than where we were in 2008 and 91 when we saw major price corrections with major foreclosures a factor. Everyone has good loans. Everyone has a ton of equity that they're sitting on. There's no reason to foreclose. They're just going to sit in their existing homes. We don't have bad loans that were written like in 2007. Ninja loans, they called them. No income, no job, no assets. We don't have those. The loans that have been written since that point have been good loans, solid loans, and prices have gone up. We're dealing with a lot of equity. So people don't have to sell. They just are selling because they want to do something else. Okay. But given all that, affordability is still a challenge. The high prices and even with a little bit lower rates and higher insurance costs, that's what's keeping the buyers on the sidelines. So I get it, but I think it's false in the sense that right now I can get you a better deal than what that list price is. So hit me up. Talk to me. All right, quote of the day. John D. Rockefeller, American business magnate. Everybody knows this name, the Rockefellers, philanthropist, considered the wealthiest family in America of all time, pioneer in real estate investment from well back in the days. So his quote is this: "The major fortunes in America have been made in land. Land, they're not building any more of it. If you get land in the right place, you invest in property, it's a amazing investment long term." All right. Remember, if you like this video, please help spread the word on social media. Helps us so much. Just tap the share button, share it with your friends and family. Thank you for sticking around with us. This is Roman Shersher, your #1 online resource for buying property.